Thank you for joining us at XM.com. You're watching today's Daily Market Comment by Haralambos Pisuros. I'm Christina Marujos. The dollar strengthened against all but one of the other major currencies on Wednesday, but lost ground only against the yen as market participants entered panic mode again after Credit Suisse's largest shareholder said it could not provide further support, citing regulatory issues. The Swiss franc and the euro fell the most, with Credit Suisse's own shares tumbling to record lows. European and U.S. bond yields plunged again, with investors scaling back their Fed hike bets in a panicked manner. Today, the dollar is pulling back, outperforming only the Kiwi. The pullback in the greenback was the result of easing jitters due to headlines that the Swiss government was holding talks on how to stabilize the bank, with Credit Suisse itself announcing later that it would borrow as much as 50 billion francs from the Swiss National Bank. Investors became somewhat more confident that the Fed could eventually deliver another 25 basis points hike next week, currently assigning a nearly 70% chance to such a move. That said, the tension did not totally vanish, and this is evident by the fact that they are still seeing almost 100 basis points worth of rate cuts by the end of the year. However, it is hard to envision a new dot plot by the Fed next week that matches the market's currently implied path. Therefore, the risks surrounding the FOMC meeting may be tilted to the upside. Investors also scaled back their hike bets with regards to the European Central Bank, which meets today. Despite the bank telegraphing another 50 basis points hike and President Lagarde saying last week that such a move is very, very likely, market participants are now evenly split between 25 and 50 basis points. Therefore, the euro could gain if officials decide to stick to their guns, but nevertheless, whether the common currency can hold on to any decision-related gains may depend on the updated economic projection and any signals regarding the upcoming meetings. What's more, how worried the ECB appears with regards to the banking crisis may also impact the market's thinking about the Fed. European stocks saw their worst day in over a year on Wednesday due to fears about the stability of the banking sector, with a sell-off rolling into the U.S. session. That said, headlines of the Swiss government and central bank are coming to Credit Suisse's rescue allowed Wall Street's main indices to recoup some ground, with the Nasdaq closing with slight gains. However, the risk for another round of selling is more than visible, especially if central banks continue to raise interest rates more aggressively than the market currently wants them to. Thank you for watching today's Daily Market Comment here at XM.com.